From Barangaroo Studios, this is the COB, brought to you by eToro. Invest in ASX shares with $0 commission.
Hello. This is the COB, all the stuff you need to know about the day and I suppose the week in business and markets. I'm Nadine Blaney.
I'm Kyle Rodder, and I suppose it's been a good week. In fact, it's the first week in 8, I think, that will have registered a gain for the week, up around about 3% or thereabouts. So after, well, what has been a very difficult March and ultimately probably a difficult quarter, again, something positive for you.
Well, I'm glad you said positive. I feel like one of our regular viewers took a bit of a pot shot at me today in an email saying you shouldn't be talking about silver linings and optimism, that, put it in perspective. It's been so negative as of late. Yes, we know, I know, and I think he referenced market manipulation, in fact, in that. And I think you're overstating, my impact and effect and powers over things.
We do call it the Nadine Blaney phenomenon. Just certain days when you're wearing certain colours, the market will change. I've seen it.
But it is nice. It is nice to see a bit of green on the screen. We know that there are still big credit issues within the global banking system. I spoke with Franklin Templeton earlier today. You can check that out online. It was a really good interview, I thought, and lots of information contained in it. And of course, we're sailing toward, Kyle, the RBA that meets Tuesday, 2:30.
It certainly does. And a lot of the conversation we have had this week is centered around that. I think a lot of the conversations that we'll have next week, and we'll go through that obviously in a little bit, but we'll be around that too. We don't not only do we have the decision on Tuesday, but we also have a very key speech from Governor Lowe on the Wednesday, which I guess will be something of a sales pitch, I would imagine, on how the RBA is handling policy as well as, what it sees from here on in.
So it looks as if we're going to be up around 3%, a little bit more than that for the 5 trading days, which is a bit of a relief. We saw a lot of strength coming through in the mining space, in the big miners, BHP up around record highs again, and had another really strong day today. Hopes around the Chinese reopening, hopes around, demand coming from that part of the world. And then you add a little, a lot of M&A into the mix. And it was really, a relief for a lot of investors out there.
Yeah, for the material space, it's fascinating, I suppose, just really because we're still seeing that divergence between underlying commodity prices for now, and still the big 3 miners are very close to their record highs. So we're really betting big on that China story. And today we did have manufacturing and non-manufacturing PMI figures out of China, and the services PMI at the very least, so the non-manufacturing, I should say, PMI, was a lot stronger than expected. So we'll see how that's digested in US trade, especially after the inflation print that we get. But maybe some positive signs coming through, maybe some justification for that optimism reflected in the miners.
And Dalian and Singapore iron ore futures today, again tracking higher. It looks as if we're on track for a second quarter of gains, and again, it's on the expectations of those improved, the improved demand side of the equation coming through in China. I just had a really interesting chat with a small cap expert on agri commodities as well. So phosphate, rock phosphate, and potash, and obviously they're part of the whole food security conversation. But if you'd like to check that out, I don't think it'll be in the show notes, but it will definitely be available online if you look for small caps. And I thought it was a really interesting conversation. Obviously, it would be a bit more of the risky end of the market because there's such small caps. But interesting thesis when it comes to the investment case there.
Yeah, absolutely. I've said for a little while, not that my opinions as worthwhile as that individual, but certainly I think one of the themes for the 2020s is going to be food security. When you look at the strategic issues as well as the impact of climate change, there's probably a reason why Bill Gates has bought up a lot of farmland in the United States. It's going to yield a very healthy return in time, I would imagine.
Yep, I would agree. But again, who am I? Anyways, just the optimist here. Let's get to some of these sectors to see how things are looking today. Yeah, the materials really, again, leading, and we also saw real estate leading today, and we've got information technology. So that's another, I guess, key theme of the entire week, Kyle, is the fact that we've seen these big tech names in the US outperforming. Really, they are responsible for a lot of the gains that we've seen in the US, and the chip makers, again, really in favor in the United States, those big, the big behemoths. So interesting dynamics.
Yeah, I mean, we've probably seen it a little less here because we don't have those kind of high quality tech names quite as much as the US. But if you listen to some of the breathless headlines today, the Nasdaq's in a bull market. It's up 20% off its lows. But the truth is that we've got interest rate expectations changing rapidly over the last few weeks. So duration is starting to outperform, and to an extent that's feeding through to the ASX 200 as well. And we have to keep an eye on the banks too. Very, very much a big mover in the market, no matter what they do. And banking crisis averted, I suppose. Obviously, we've put that to the back burner, and one of the reasons why we have obviously rebounded this week in global equities.
Yeah, okay. So there's a little look-see at the banks, so underperforming the broader market. It was a pretty quiet day in terms of corporate news out there today, Kyle. But it comes off the heels of a really big week. We've talked about the metals and the miners. We've somehow not mentioned Liontown and Albemarle and that bid that's yet to be improved as of right now. However, it seems as if it's a pretty sure bet that either that bid will be improved or another bid will emerge. You heard us talking to Henry Jennings on this podcast and program yesterday afternoon, sort of saying, you can't understand why, Pilbara wouldn't be in play, why any of these miners wouldn't be in play. So lithium, a big story this week. And we also had M&A in general, United Malt Group, that bid coming through from that French company, also sort of set things on fire this week.
Yeah, and just I suppose in today's news, we did have Rio Tinto and First Quantum reporting a partnership to develop one of the largest copper deposits in the world. AMP Capital also had its AGM headline in the AFR today. The Royal Commission almost killed AMP. My first thought was, if they had killed it, would they have started charging themselves for life insurance after being dead? I'm not too sure. But anyway, clearly still trying to work its way through that, very significant event in AMP's life cycle, business cycle.
Yeah, all right. Look, there wasn't a lot of news around. There was a bit of news around Bravura Solutions. It's been shifting its board around. The question being, after it looked to raise capital, I was told it was a bit of a rescue raise. Is this turnaround story taking hold? Is it a good bargain right now when you think about the tech names and just how hard they've been beaten down? Anyways, it was the stock of the day. Kashi had a chance to speak with his expert guests about this one. Let's take a listen.
It's a business that's going to be worth something, but I'd probably want to see, can it actually do 7% net profit margins? They've had their gross profit come down massively in the most recent half. And it's hardly been a long-term growth story either. Its gross profit's kind of gone up and down. Yeah. So not really a secular grower over the last 10 years. There's no reason to think that it would necessarily become one. So the question becomes, what's your sustainable profit margin?
There are good signs there. Yeah. The business obviously is worth something. That software, it's not a complete loser. Look, and they've done the right thing, making structural changes, capital raisings, and the like. So yeah, it sort of does.
As an analyst, that ticks a box for you.
That ticks, and director buying as well ticks boxes, yeah. But it's certainly not. Look, it's been in a fairly significant downtrend for quite a while, and there's pretty high quality competitors within the space as well. I'd be very much wait and see.
That man will be joining us in a little bit for a drink on the last call. Looking forward to that, but also really looking forward to speaking with David Lane from Ord Minnett. He is spending a little bit of his Friday with us just to give us his thoughts on the week that was. David, what do you make of it? I mean, we'll bank it. We'll take the gains that we've seen, but is it likely to continue?
Well, that's the big question, isn't it? It's been certainly a good week as we come into Friday, but I guess 2 weeks ago, we probably didn't expect that we'd be up for the quarter. So I think on current numbers, we're up about 2% for the quarter, so an okay return. But we have had a massive swing. We've had a 10% swing across the ASX 200 over the last 3 months. So it's been a very volatile period. As you said in the intro, that the Nasdaq has up about 15% for the quarter. So they've done very, very well. And surprisingly, given all of the issues that's been going on with Silicon Valley Bank, etc. So we've seen a turnaround as far as many of those tech stocks are concerned. We're still pretty cautious about the US and think that they haven't necessarily factored in a lot of the issues as far as interest rates are concerned over there. So cautious US, but we are starting to see some value here in Australia, and we've seen not only some of those tech stocks here rally strongly, but as you said, the resources are doing quite well. And we're seeing some value coming back into the banking sector and some of the bigger names that have been sold off with the uncertainty that have occurred in the last month or so.
So I'm just looking at the market now. Obviously, high for the week, high for the day. For the month of March, and I want to quote this more just because of whether it's sort of a swings and roundabout situation. So for the month of March, we're down 1.1%, which in the grand scheme of things is fairly modest. Because so much of that was driven by this kind of banking concern in the United States and how it trickled over here, I mean, do we sort of write that off and then now it's back to what we were worrying about in February, which is rate hikes, growth trajectory, Chinese story, all those sort of themes for our local market?
Yeah, I think so. I think we're getting back into a period where, assuming there's no other major events like the Silicon Valley or even Credit Suisse, I think we'll get back to a bit more domestic conditions. We saw earlier in the week that the retail sales flat, but still actually quite resilient. But we have seen that the CPI came off a little bit, so that will give, hopefully, the Reserve Bank enough to pause rates on Tuesday. There's still a little bit of uncertainty as to whether they'll have another raise or a pause. We'd like to hope that they pause, and I think if they do that, that could actually be a bit of a positive for our market at the start of April.
Well, David, we're speaking with a guest earlier today from State Street, Dan Gerard, and he reckons that all of this banking crisis and the credit crunch will probably put a bit of a dampener on some cyclical stocks. Do you agree?
Yeah, it's certainly possible. I don't think those issues are necessarily over. We think that Silicon Valley Bank was really more mismanagement, but reality is interest rates have risen very, very quickly. So there will be people who will get caught out, or businesses that get caught out. So yeah, definitely, I think those cyclicals are a little bit vulnerable, and we're also concerned about the medium to longer term outlook for retail spending, because we are heading into a period of potential economic slowdown. The interest rates will start to bite here, those people coming off fixed rate mortgages, etc. So we're heading into a period where we think that economic activity will slow down. So some of those cyclicals, as well as the discretionary retailers, we're a little bit concerned about over the next 3 to 6 months.
David, had to be short and sweet today, just in the interest of time, but really appreciate you helping us wrap up the week that was. Have a great weekend. David Lane from Ord Minnett.
Thank you. You too.
Yeah, I've got to invite Dave to come down for the last call one of these weeks.
Yeah.
Would be good to see him in
take
Sydney.
our show to Queensland, just on roadshow.
Oh, good idea. We'll work on that.
Yep.
All right. Tonight, there's obviously this big risk event on the horizon. So, some of what we've talked about will probably be null and void after we get the PCE deflator coming through in the US tonight.
So
next week, it's a pretty big one as well, isn't it?
Yeah, absolutely. So RBA a decision. We also have US non-farm payrolls on Friday, which will be significant. Good Friday as well, so we'll be off, of course. Clocks change. I want to say that too. Clocks change over the weekend. So Wall Street closes at 6 a.m. And Ken, if you were listening yesterday, want to find a way to part with your money early in the morning, you'll have to do an hour earlier than I did at least a couple of weeks ago. And then we've got that RBNZ decision and the Governor Lowe's speech. So first week of the month, always a lot of Tier 1 data.
Yeah, I'm looking forward to just seeing a bit of sun when we get up in the morning, Kyle, and make our way to the AusBiz newsroom. You know who will not be making his way to the AusBiz newsroom, at least not on a daily business? That is David Scott. David Scott, our esteemed colleague, is leaving us just because he's got some life changes coming up.
Yeah, absolutely. Number 2 on the way. I'm sure Scuddy is not wouldn't be too bothered with me letting you know that was the case. But obviously a fantastic contributor to the Australian media landscape for basically a decade right now, a decade up until this point. Been fantastic for Ausbiz. I've got to say, one of the things that I loved working here was learning off of his experience. And I know a lot of folks that do watch Ausbiz really benefited from his insights, probing questions and everything else. So Carolina, our producer, just said that it looks like he's died there based on what I just created on Canva before. He's totally fine. That was just my poor...
He's absolutely fine.
Totally
in fact, he might join us for a little bit in the last call.
Absolutely.
He's good. Yeah, we will miss you, Scuddy.
Thank him nevertheless. Thank him nevertheless.
From all of the team here, we thank you and we wish you well, and we know we'll be in touch, so we look forward to speaking soon. Look, let's get the last call, the show on the road. I like your artistic skills, Kyle. This guy is he's a renaissance man. He has many talents.
Yes,
on the last call,
master of none.
Philip Pepe from Shawn Partners, Mark Gardner from Macro Capital, Henry Jennings from Marcus Today. If you don't watch it live, you'll have to catch up with it. It's good fun. We'll see you then.
The COB is brought to you by eToro. Invest in ASX shares with $0 commission.